Hello, welcome Utah residents and those of you who are looking to move to Utah. I just want to talk to you about your FHA loan options in the state of Utah and first describe the basic requirements for an FHA loan. One of the things that you're going to find is that FHA loans are very flexible. They allow for lower credit scores, they allow for a small down payment, higher debt to income ratios, and there's also a great FHA program called the FHA 203K rehab loan. I'll link to that video right here. That loan allows you to borrow the funds needed to purchase the home and also additional money to make repairs or updates or upgrades to the house. Let's say you don't like the kitchen, you don't like the bathroom, you want to paint, you want new floors, you want a new roof. All these things can be done by just increasing your loan amount, and then the lender will pay the contractor as the work is done after your close. So that's a great program and really only available through FHA. So you'll need a 2-year work history, and it's okay if you've changed jobs, and it's okay if you've had a little gap in your employment. That can be dealt with. It's going to be something where you're gonna need a 3.5% down payment with credit scores of 580 or better, or if your credit scores are 500 to 579, your down payment requirement will be 10%. You're going to not want to have any recent bankruptcies, especially Chapter 7. You'll have to wait 2 years after your Chapter 7 discharge to qualify for an FHA loan. However, if you've had a Chapter 13 bankruptcy, you can qualify after you've made at least 12 on-time Chapter 13 bankruptcy payments. Another thing to understand is that FHA loans also have loan limits. There's a maximum loan amount you can get for an FHA loan for a single family home, a duplex, a 3-family, and a 4-family. And those limits are set by county in the United States. Most of the counties have the same limits. However, there are some counties that are looked at as higher cost because the homes cost more. And in Utah, there are about a dozen counties where the loan limits are higher than some of the other counties. The other thing you're going to need to understand is you're going to have what's called FHA mortgage insurance, MIP, mortgage insurance premium. There'll be a 1.75% premium payment due at closing, which can be rolled into the loan. And then you're going to have a mortgage insurance payment or premium each month, which is similar to PMI on a conventional loan. It's going to be each month for the life of the loan if you've put less than 10% down. If you've put at least 10% down or more, then that mortgage insurance can be removed from your payment after 11 years. You're allowed to have cosigners. Now, the cosigner's income and debt will be used on your mortgage application. You're also able to get a gift from a relative to help with the down payment. The seller can contribute closing costs monies for you. It's called the seller concession for closing, where they're going to provide you with up to 6% of the purchase price towards your closing costs. Some of that money can be used to buy the rate down. So it's really a great program. If you do need to speak to someone, just follow the link in the first pinned comment. If you're on the website reading this right now, there'll be a button below where you can get a quote and speak to someone. We look forward to speaking with you. Thanks again for watching today. We will see you next time.